Hello, Dave Farmer, Loan Consultancy, and I want to bring you up to speed on what we know about the Coronavirus Business Interruption Loan Scheme. This is the loan scheme announced by the government to support businesses through the period of interruption and uncertainty due to coronavirus. Now, there's details available for this online on the government website. What I want to do is give you our take on how we see it working, because the devil is always in the detail. Now, for those of you that know about the Enterprise Finance Guarantee Scheme, the EFG, well, the Coronavirus Business Interruption Loan Scheme is going to follow a very similar route, I think. EFG, that's where the government will guarantee 75% of the lender's liability in the event of default. So if you were to borrow money on an EFG scheme and it all goes wrong, you default, the lender can claim 75% of what they've lent back from the government. In return, you pay a premium of about 2%. So that should really be a good deal for the lender. But EFG is very hard to obtain. And the reason why is because the government put a cap on how much each lender can claim from the government. So once that cap's reached, every other loan that lender's got on the EFG scheme is effectively unsecured, which gives the lender a little bit of uncertainty. If they get a run on claims, actually they're on their own. The Coronavirus Business Loan Interruption Scheme guarantees 80%, so it goes a little bit step higher than EFG. There's also no charge to the borrower for that guarantee to be provided, and for the first 6 months the government will cover the loan interest cost, and loans available up to 5 million. Subject to a cap per lender. And that is a cap on guaranteed claims per lender. So what that leads us to think is that actually the model is very similar to EFG, and the level of underwriting that lenders are going to put to these loans and these applications is going to be very similar to EFG, which makes us question how easily accessible that money will be. We wait and see. The really unusual part, and the bit that I struggle to get my head around, is that if you're underwriting loans for businesses that are suffering an interruption, well, if you use standard underwriting practices, you're going to say no to most of them because of an uncertainty about how the business will recover and how future repayment is going to be made. So it really begs the question of, well, how's this scheme going to be implemented? So what should businesses do? If you've got clients asking about the Coronavirus Business Loan Interruption Scheme, then the best tips I can give them is to get their bank statements in order, get their financials ready, get the year-to-date financials ready, and if you've got forecasts as well, get them prepared. I would also look at your options sooner rather than later. And if those clients have got any questions at all, get them to give me a call and we'll take them through what we know at that stage. We wait to see full details, but there are a few concerns in the detail that it might not be as straightforward as we're led to believe. We'll wait and see. If you've got clients asking questions, point them in our direction and we'll do our very best to answer them for you. As and when we understand more, we'll keep you informed.